The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host, the muskrat of Wall Street. Now, it doesn't sound as good as the koala bear of Wall Street. Certainly not the wolf of Wall Street. We are seeing a market that is decidedly higher, up 8 and almost 9 points on the S&P cash, up 20 on the NASDAQ, and fairly decent volume for one of the up days. This is the first up day we've seen with a lot of volume at this time, to almost 2.1 million shares. We've had a little bit of pullback. I think it got down as low as 4 points higher on the S&P cash. As we look to expiration week, it's not uncommon to see this as the high of expiration week. It pulled back on Thursdays and then pushed back in Fridays, trying to get back to this level. So we'll have to see how this closes. But normally the high of the day, which is a point higher, 1.5 higher on the S&P cash, is pretty much all you get out of expiration week. Now, of course, we've got a huge amount of earnings and a little bit of volatility on the individual stocks. Much tougher to come back and see a great deal more of these other stocks moving. And we'll get to all of them out there. But just giving you fair warning, you can call me at 877-927-6648. You can email me at PATH, at TFNN.com, or post a message in the Tiger's Den, and we'll try to respond to it throughout the show. And as we normally start off, on this day in Histoire, a device innocuously called the Gadget is tested successfully near New Mexico, and the world's first atomic bomb, and it detonates at 5:29 and 45 seconds a.m. Boy, couldn't they wait just another 30 minutes and let me sleep in? Releasing 20 kilotons of energy and vaporizing its 100-foot steel support tower, the nuclear age has secretly begun. And, of course, not very long after the bombs started, Nagasaki and Hiroshima. And it is an important day, I guess. The nuclear age. Interestingly, wasn't all that big of a bomb. Actually, one of the smallest bombs ever tested at 20 kilotons. But they were playing around with them. And, of course, the one at Hiroshima was just 15. Although it was a bigger bomb, they were trying some different things out. This was they had two kinds of bombs. One's very easy to go off. It's called basically a rifle or a... basically it works like a rifle. Shoots a pellet at one end and hits at the other and makes everything go boom. This one was one that basically exploded everything to the center, an implosion to force nuclear fission. And it looked like a giant soccer ball. About 8 feet in diameter. No, 8 feet in diameter wouldn't be right. About 8 feet across in circumference. Yeah, I think that would be right. So, as we look at this day, it is interesting. Of course, a lot more discussions about Janet Yellen and her comments. Mostly, get out of my way, old lady. You shouldn't be commenting on the markets. Get off my grass. Well, that's probably if she was a guy. But anyway, a lot of comments out there that she doesn't know what she's talking about. And, of course, we've had more comments like that today. over a few times. My guess is that if history is any clue, normally you get one huge downturn in the market. And at least that generation looks a little jaundicedly at the people trying to do the exact same thing 5 years later, 6 years later. But I just love that quote. The euphoric episode is protected and sustained by the will of those who are involved in order to justify the circumstances that are making them rich. It is equally protected by those willing to ignore, exorcise, or condemn those who express doubts. John Kenneth Galbraith, a quick read at 130 pages, and I think it's only about $10 on Amazon. Great read. When we're talking about how reality comes much later, Stanley Druckenmiller, one of the big men of Wall Street, said the Federal Reserve policy is baffling as he's ever seen. He's continued that the current Fed policy makes no sense from a risk-reward perspective and that it will end badly. His comments are the same, and of course, you get the same thing, which is you got the Titanic, you got all these warnings of icebergs ahead, and you got the owner saying, hey, I want the speed record for going across the Atlantic, so damn those icebergs, and of course everybody dies. But what we have now is a bunch of people going, well, you know, we're an hour and a half out from England right now, or Scotland. It left from Scotland. An hour and a half out, we haven't seen one iceberg, so let's just go full ahead. And we know that there's no problem. And even if the first trip made it successfully, icebergs are still there. Maybe you hit it on the second or the third one. And I will refer to the first book from Nassim Taleb, Fooled by Randomness. You never want to put a bullet in that chamber and play Russian roulette if it could end that badly. Unfortunately, that's what the Fed does. And especially since they're full of economists that are normally wrong, that bullet's almost always in one of those chambers. The question is just how many chambers there are and what causes the trigger to finally be pulled with a round in the chamber. But very good discussion about what I'm looking at. And he's basically said the same thing that I'm thinking right now, which is, or was thinking, that is, could we be higher in a year from now? The answer is yes, and it will end badly. Could we learn from the Titanic and instead use some caution and try to end the pump early this time instead of late, as every other time the Fed has ever acted? And economists, they never see it coming. They never see the blow-ups, and they never see the recovery. It's always just a kind of a mystery to them, most likely because it's not their money involved. If we paid them based on whether it worked out 10 years from now, I'd probably feel a great deal better. But you probably find the interview one of the better interviews I've ever seen. You probably find it on CNBC. Maybe you watch it tonight. It runs, I think, about 20, 25 minutes. But Stanley Druckenmiller, I think it happened just before noon Eastern time. But I'm sure it's on their website. We've talked about it for a while, and that is Yahoo. It's down about 4.5% at the moment. It's almost valued at nothing if you go back and put in the shares of Alibaba. I started saying maybe 3-6 months ago that there were big sellers in this one, and the only reason that Yahoo even existed was because of Alibaba. If you back out what the shares of Alibaba would be worth at a $150 billion market cap, $130 billion market cap, which is what the latest documents in Alibaba actually get to say, you would see that Yahoo's basically valued at absolutely nothing. Now, when you look how bad it is from quarter to quarter, they are off about another 15% on display advertising revenue. Their big income maker was severely down, and the one that is growing doesn't make them a great deal of cash. Probably the only reason they're not down 15 or 20% today is Yahoo will be required to sell only 140 million shares compared to the 208 million shares. It's very unclear how many shares the Chinese government were going to make them sell, but 3/4 or so. But they were wondering if it would be 180 million, leaving only 28 million left. And of course, a lot less than the companies agreed to last year. Anyway, we were talking probably 6 months ago, I forget, that I thought that everything about the current CEO smacked of political correctness. She is a beautiful woman, and I thought that they were using that to distract us from the fact that there was no real strategy or strategery, as some people say, in what she is going to be doing long term. I just don't see it. They continue to buy companies. I've never seen really one of them do a whole lot. They retire a lot of them. Kind of looks like make work. Anyway, she's certainly capable and smart. But sometimes there's just, after the Titanic hit the iceberg, it was going to the bottom. There was no way to save it. They could have done several things to make that time last a lot more than the 2 hours and 30 minutes before it sunk below the waves. But the problem's over. Anyway, I already basically brought up all the points that are being brought up today on financial infotainment 3 or 6 months ago, whatever it was. But they're now bringing them up, and the honeymoon is over. Let loose the dogs of war, because they're going to be playing Pac-Man on her rear end until she gets something going with Yahoo. Down 4.5%, probably would have been down 10 or 15%. Release the hounds. So, what else can you say? It's the biz, not the chair. The Bank of America, of course, is down. Bank of America's second quarter profit fell 43 cents, bigger decline than analysts had expected, but kind of keeping a lid on that XLF. Bank posted $4 billion of litigation expenses linked to mortgage disputes following the financial crisis, which was larger, and of course a few other things out there that no one liked. But we get one like Wells Fargo, it's down. We get one, it's up. We get Bank of America, it's down. Not a lot in this financial sector that makes me feel all warm and fuzzy. A few things are looking good out there. Another one that's stinking to high heaven is BlackBerry. Shares were down about 10% in trading this morning. They've been kind of bouncing around. In the wake of the news that last night after the bell that IBM and Apple is making a big enterprise deal. We'll talk more about this when we come back. But Apple bounced, IBM got a little juice. BlackBerry, we'll talk why it's starting to sink out here.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box.
For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we are back. Anyway, we're talking about BlackBerry, and I guess this is really a bank shot on them, but I've always believed that they'll be out of business in a couple of years. It'll all come very quickly at the end. Right now, it's all financial engineering and trying to find people that they can suck into buying this big pig. And as the old, I got to find that commercial. Let's put some lipstick on this pig. But it is interesting. Now, really, why is BlackBerry been hit? The IBM Apple enterprise deal. Since Apple actually came out, they pretty much did everything they could to act like jackasses when they went into corporate enterprises. We think differently. You're a bunch of idiots. What are you doing with those IBMs? That was kind of the 80s. They probably got run out, especially if you've got, let's say you've got 100 offices or 100 desks. Everybody needs a computer. And you could buy the IBM or MS-DOS computer in the 80s for $1,000 or $1,200. And, of course, you could buy a Mac, but, it was going to cost twice as much. Well, you got 100 people. That's quite a lot of money. It's not like just buying one. They buy a huge amount. And, of course, Apple not really willing to deal. You're a dummy if you don't buy it. They've done everything throughout the years, even into Steve Jobs' second round of CEO to basically belittle people and probably become pretty much persona non grata in the at least enterprise side, the top Fortune 500. Maybe individuals will use some of their tablets, that kind of stuff. But Apple's done more than it can to make sure that they don't get any business in those enterprise sectors. And, of course, they, to the most part, go after straight to consumers. IBM, just the opposite, does everything it can to sell services and support, and how can I help you, and what is your problem so I can find a solution to it. So probably not a bad idea. IBM, very good at dealing with business. Apple, very bad. Apple thought that they would just just weasel on in and take over everything with all their apps. And, of course, these big businesses, especially healthcare that they're going after now, we'll be able to do it all. We'll do everything. We'll do all the back end. And Apple's just not really cut out for that. And for all the discussions of all the big deals they were going to get, and be the tablet would be the thing that every doctor had, just didn't kind of develop in the last year as they said it would. Because all that data has to go somewhere. It all has to be organized. And the app on the iPad needs to connect to something on the other side. Apple really not good at understanding specs and why things need to be built a different way. IBM, very good. So probably a pretty good deal. But one of the things that IBM does have that Apple does not have, that BlackBerry did have, and that was being able to offer fairly decent security. You don't hear a lot of people about either BlackBerries being cracked and or people getting all the information off somebody's BlackBerry phone. One thing that they did do very well. So IBM's coming along. It's going to use its engineers from a big project development to make small apps. And if we even want to go back further, I think it was the early 90s that the CEO of Oracle, who I always think is probably one of the best CEOs that has ever been a CEO, at least in a tech company, called it a thin client. And that's exactly what tablets are. Not a lot of memory, not a lot of processing power. It was all going to be done and he didn't say it at the time, but the cloud. And that was kind of what it is. So anyway, we're looking at BlackBerry. The IBM Apple deal is interesting. The question is whether or not the scorpion can sit on the back of the frog all the way across without jabbing it. And Apple has a horrible history, just like the scorpion, of stinging the frog halfway across the creek, if you know that story. But in theory, a great idea. Sells Apple's products, and IBM's going to make a lot of cash off of it on the other side if it works out. Anyway, we'll be back in just a minute, and we're going to talk about Intel, Microsoft when we come back, what we can figure out from the earnings call on that. Be back in a minute.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And as we come back, I had a couple questions in the den and said we're going to get to it in this segment, and I will. Just wanted to bring a few more things up. Amazon's looking at going after a digital ebook and audio book subscription service that provides Kindle users with all the content they can consume from a potential library of over 600,000 titles for just $9.99 per month. This is the first thing I really wanted to join. For a lot of the things like Prime, I thought it was a cult. If you bought enough things, of course, it paid for itself. But they're getting awful close to, I think, monopoly in this sector, and the more that they do probably makes that closer. If I was looking at any big risk on Amazon right now, it would probably be whether or not the government comes after them. I'd subscribe to this for $10 a month. I listen to a lot of audiobooks. And, of course, if you need any more out here on yesterday's close, where I played the conversation between the Comcast call center agent trying to make sure he was doing everything possible to make sure that the customer did not cancel his internet service. Interestingly enough, some people have dug into what was going on, and it's kind of funny that normally what these customer agents do from people on the inside is if it's anywhere close to the end of the month when they get their commission, 22nd and 21st, they just hang up on people so they can't cancel. Anyway, there's more articles out there. If you Google it, you can find it. But interviews with people that used to work there and say that because of the way that those people are paid. Now, today we have, of course, Intel coming out. And let's go INTC real quick. Oh, what is going on here? Hang on a second. I clicked on the wrong thing. There we go. Nice pop for Intel. If you go through their earnings call last night, they basically say the same thing that we've been talking about on Microsoft, and that is the XP upgrade cycle is in full swing. One of the things that no one else has brought up, and I'm kind of surprised that it's gone under the radar so quickly, was that, of course, the Windows 7 and Vista issue, which starts in January. So no more support for that either. So we're going to see a lot of push in an upgrade cycle into going far into next year on even newer machines. Of course, maybe the newer machines won't require you actually buying new hardware. But I think some of the people that are on the edge probably continue for that. Now, when you dig into the numbers, you find out Intel is up for two reasons. One, sales were better. Two, they're spending a lot of money buying their shares back. $4 billion last quarter. They're going to spend another $4 billion this quarter. And it makes the EPSs look awful good as you continue to buy all the way up and reduce the amount of float out there. And $4 billion, it'll go pretty far in buying a lot of shares of Intel at pretty much right around $30. But they bought all the way up into earnings, and they've probably buying today and make sure it stays up at its highs. But I think that we're looking at a secular move where everybody, and I already told everybody how many times the head of Intel, Andy Grove, said he counted 13 times that the end of the PC had been written. And, now he can say it's 14 times because it's not over yet. We know that tablets are dropping in sales much faster than PCs were. And in fact, from what Intel is telling us is that the bottom of the PC market is in. If you look at the numbers inside, of course, they are going to be working on getting into tablets, which they haven't done much yet. So I'm looking for margins to come down. This may be the quarter that is the Cinderella. It's not the Cinderella. What's the one with the little bears? My porridge is just right. I'll think of it in a second. Maybe some of Goldilocks. The porridge is just perfect. And they were printing 66% margins. They'd been down as low as 61 on their processors. So they're basically getting full pop. I think they've gotten as high as 70% on margins out there. But 66, pretty much up there in Apple territory with hardware because they do sell chips. But I have a feeling that's going to come down, especially as tablet business starts picking up. And I would expect them to probably come back and fill this gap. I actually was pretty surprised that they didn't sell off a little bit on this news today after the open, because it's probably about as good as get. But I have a feeling a few people shorted this, and we're probably looking at 3 days of higher price, at least in Intel. But look for at least 2 quarters to continue the XP upgrade cycle, and then look at the beginning of the year for the Windows 7 and Vista upgrade cycle, as it's about mid-January where support will fail for Windows 7 or stop, unless you're a business client and you pay cash. So, what can you say? Anyway, very interesting move out there. BBBY. BlackBerry. Is it BBY? BBBY. BBRY is BlackBerry. Want to look at it real quick as we go out there. But, and Intel is going to buy another $4 billion in the next quarter. So I'm not shorting it. Just to make that clear. BlackBerry, of course, down on high volume. This thing had gone up to $11. Of course, what they're really hoping is that they can keep this thing above $10 long enough for funds to come back and buy it. That means that this thing has to stay above $10 for about 3 months or so I don't think that there's a snowball's chance in my oven that's going to happen. This thing's probably headed back for this, but certainly they had a fairly decent looking business within the government for security. And I have a feeling that the first thing that's going to be targeted is that low-hanging fruit, and that is business. IBM is very good at going in there and getting those contracts, and Apple can deliver the low-end hardware for the end user, and IBM get all the big business on the backside with the government. But a lot of volume, not as much as this gap down, but my guess is that this gap from about $8 to $9 gets filled fairly quickly once again as BlackBerry is on the way down. Okay, Yellen Cedar stops. Well, we're going to look at a few other stocks out here of interest. I wanted to look and see how some of these stocks were doing. YRC Worldwide, this one, pretty light volume from its previous highs and a gap where this thing gapped down with almost 3.5 million shares back in 2013, back in actually August 7th, 2013. And just 3.5 million shares. Got into it with 3.7 million shares. So you know this thing's going to retest it, but as it's coming back up and filling this gap once again, very light volume back in. I'm going to be watching this one fairly quick. We've been talking about Whole Foods. It's one of the few stocks out here that looks like it could be making a low, and that still is somewhat, what can you say, still what interesting, but this thing doesn't seem to be catching a bit, a little lighter volume than before, but you had your big high volume low come in on June 3rd at $37.02. You want less than 49 million shares, and you certainly have gotten it. 2 days ago, 8 million shares. Yesterday, 11, let's call it 12 million shares. Today, very, very light volume on the pullback. You'd want this thing to close back above 37.02 to consider it, but one of the better looking ones out here that looks like it could be making a bottom. Another one that's out here that had a slaughter fest back on, April 30th. The huge jump down with almost 4.7 million shares. And, of course, made a low at $37.50 with 1.5 million shares. But tried to come back in this gap, never filled much of it. It's come back now here, but this is what you're looking for, is a total lack of interest over the last 4 or 5 days with Vistaprint, and pretty much exactly what you got. Even if you compare it to the lighter number of 1.5 million shares, I mean, this thing's got vapor out here. I certainly wouldn't be short this thing right now. Maybe it cracks on heavier volume. Maybe it doesn't, but pretty tough. Teva Pharmaceuticals. Some of these stocks not getting any love today. Let's go back and look at the... okay, so we're up just under 8 points on the S&P cash, 2.3 billion shares. So volume decent out here. But Teva Pharmaceuticals, one of the reasons pharmaceuticals, biotechs are kind of weak, besides Yellen's comments yesterday, they've been weak before that. And, of course, if you look at Teva, it's this July 3rd high where this thing tried to break out. And, of course, going into a weekend, long weekend, maybe you can make the case that, volume is going to be light anyway. But it shouldn't have been light 3 days ago with about that same volume coming in. And, of course, you needed about 11 million shares from the April 2nd high at $54.70 to go against that. Energy did kind of come out of this leg. Looks to me like this thing is in a trading range probably between this $55.24 and $48.35. Let me look at a couple others real quick. Wanted to find... IBB is still one of the weaker stocks out here. Let me get to it here. Is it IBB? Maybe if I can actually spell, it would be different. IBB, this thing just did not have any energy coming back off this low in the NASDAQ. When you look at the leg that started from 275.40 from February 25th down to the low on March 28th, and compare it to almost dollar for dollar between the April 28th low up to the high at 266 on July 3rd. Now, this thing's been getting something. Got volume yesterday on the way down. Volume is still good and strong today. You could look at this thing as there's a gap at 235, but my guess is that over time we're looking at 217.40 on the IBB out here. Ross Stores. This one is going after its big long-term gap, and that gap is back on April 11th of 2013. This thing had a monster gap up 6.6 million shares. Getting into it today with 3.5 million shares so far. But, some of these stocks actually are lining up to be buys. Retail is just an ugly, ugly business right now. No one wants to be in it. And maybe that's what makes good buys. But I tell you what, I'd have to hold my nose extra, extra hard to buy any retailer right now. All of them look like they are sucking wind. What else did we have out here? I wanted to look at a few other companies, so let me get that list up out here, normally out here. See if anything else is going on out here. See if anything else is moving. Okay, well, I guess we didn't really talk about Time Warner, but to me, that's more of a philosophical discussion than anything else. Many people talking about how Time Warner, might as well put that chart up, TWX. I remember a conversation we were having, or I was having, with my accountant, and it had to be around 2000. He had AOL stock from $10 or something, and it was 100 and something, if memory serves me correct. And he asked me what I thought of Time Warner and Apple or AOL getting together. And I said, you're going to have two $1 stocks instead of two really big stocks. And he poo-pooed it. I don't know how far he took it down. You could see the writing on the wall on that one. Time Warner and Fox Business getting together. The interesting part I see about this is they waited till today to let it all leak out. And I'm not exactly sure what the purpose was, other than maybe to pump the market today. That we're not up 20 or 30 points tells me that this is not quite the story that they wanted. My other thought is that there were a lot of people short the stock, and maybe they were using the news to engineer a short squeeze and make their company look just a little bit better to the shareholders. Now, of course, this did come out, and a lot of people started asking. But the question is why this was such a great secret until Friday last week. And I'm thinking it's a little bit of self-serving out here. But remember the last time one of these big new internet company, the whole idea, Time Warner, AOL, wasn't so good last time. Anyway, we'll be back in a minute.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we had Dave. It doesn't say where Dave is from. Wants me to look at HealthStream, HSTM. Looking at a buy at $21. And so far, not a bad-looking chart out here. I would say that if you could get into what you really want to be safe in this one is to get a test of this April 28th low at $20.76. And if you can come in with the kind of light volume seen over the last few days, it certainly would be very interesting. Of course, there's a nice little gap it bounced off of. My guess is it's coming back to that gap. He says earnings are Monday. I didn't have a chance to check it out, but I don't think I probably would be jumping in front of this one. But what can you say? The chart looks awful good. If earnings weren't out, I'd say you might be able to take a flyer at $21 in this one. I would much rather see this thing at least get into that candle, and at least the close on that day. What's the high? It closed 21.60. I guess you'd be awful close out here. You'd want to be in that candle, though. And that would be the highest, 470,000 shares. Kind of a lighter volume one out here, but certainly total lack of interest and some high volume lows to go test out here, and light volume today. But I just don't see. Maybe this thing bounces, but kind of tough to tell. I'd have to look more into this company. I probably would buy it after earnings instead of before. And maybe you get a little bit of disappointing news, maybe even makes it a little bit better. see if we find anything else going on out here. Wanted to talk about the rest of the semiconductor space. Of course, Intel really moving the SMHs up today. But probably the bigger news to me is that Taiwan Semiconductor, even though talking about huge earnings going forward, doing all kinds of stuff, there's something really wrong out here, and you can see it in TSM. They basically upped guidance, they did everything, and everybody sold it off. And I haven't had a chance to go through their earnings call, but someone said something that someone doesn't like. And I have a feeling that it may not even be in that earnings call. It may have been whispered underneath the breath, and that is whether or not they're going to be able to kick out these chips at 14 nanometers. Of course, all these guys do is make chips designed by other people for the most part. I think 98% of their business is making chips for other people. Some people talked that it was a issue on whether or not Apple was going to start making their chips and have Intel press them instead of Taiwan Semiconductor, because they were going to be so much faster, that 14 nanometer size. And it's unclear right now, but I'd say that as Intel does well in the PC business, it's not spilling over to a great deal of others, and even people predicting huge sales are finding a fly in the ointment. But this one I'm going to have to be watching a great deal closer. Lots of volume, and volume off the top, as they like to say. This is going to be one that's probably going to be more indicative of what the SMH does in the long future. As I said, Intel is going to continue to buy shares through the next quarter. They've got the cash. They're going to spend another $4 billion. It's going to be hard to go after that one. Some of these companies without a lot of cash, like Taiwan Semiconductor, maybe be telling us the story ex-Intel a lot better out here. But I'm going to have to dig through it. But not easily giving up its clues on why it's rolled over. Maybe I'll be able to find some more stuff on tonight. I looked this morning and didn't see a lot out there already. Anyway, we've got earnings tonight. After the bell, join Daryl for that. We've got eBay, SanDisk, and Yum Brands after the bell tonight. So hang on to your hats. We'll see you tomorrow. Same bat channel, same bat time. So when you can, not when you have to.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.